Hey team, thanks for your video, great work, great attention to details. So now I will try quickly to go through some of the moments that I noted for myself that I wanted to point your attention to, and then also do some analysis, but maybe not so detailed right now, because I will send you some Euro AD video that I did for a different student, not a full analysis, just some parts concerning this recent price action. Okay, and my multi-time frame analysis, I would like to start with the yearly chart, because it has this really interesting detail here that we went with a break of structure based on the rules here, and then broke, so created a pullback inside structure and broke this structure with one more impulse, and then went to break of structure with this deep zone with one move. So as you already know, this is just a classic pattern of reaccumulation, or just a usual break of structure, but just when we allow one break of structure to happen, if we still are holding this bullish structure overall. So as you can see, what's interesting, we not only mitigated it, but already started a reaction. So starting from this 2013, started a reaction and created this fractal or inside structure, already mitigated it, and then we are now starting to move up. So from a yearly perspective, basically our target is this and then this. Of course, we don't know how it will happen, so it's just a really rough idea. It's a really rough idea, just that we have like 51% for bullishness, and then we of course see how the price develops and decide based on that. But if I was trading yearly time frame, my entry would be like here, protect here and target this one, and then wait for maybe like, I don't know how much is that, like 22 years, yeah, 25 years for my 5R or something like that. But basically this is all we can do from this yearly chart. So we have some bullishness from deep zones. Now 6 months. So on 6 months we basically see the same. Let's go to monthly. On monthly, you told everything really nicely. One interesting detail that I want to point out is how you read imbalances. So there are different kind of chains, and we will discuss it a bit later, but basically when you have an imbalance like this, you will have this imbalance, but the matter of fact is that this price action mitigated some bigger zone. And it's important sometimes to see these chains of different kinds, because again, you will not always have a chain where you mitigate like to the very last point every time. But instead, you can have a chain where the price is mitigating the candles. So it mitigates the candles and does not leave like a full imbalance, and then you can still perceive it as a chain. So for instance, this kind of price action will still be a chain, you see, because we are mitigating something bigger. And I will address this a bit later. But here I wanted to point your attention to this zone. So let's try to think why this zone was mitigated. Of course, it's really easy to talk in hindsight, but this is what we are basically doing right now as an exercise. So what could be the reason? So why it's not mitigated here, like why it didn't stop here and started to go? So you can pause the video and try to think looking at this chart. So and I myself think it to me like this. So we had these moves, and then this one mitigated everything that it basically wanted to mitigate and started this huge move to the downside. So we see that this move to the downside started from this huge manipulation. And if we see closely, we then see how the price developed. So it went like up, down here, up, down again, mitigated here, mitigated this part, went down a bit, mitigated something here, and went down. And then from that point, we only had mitigations from these weeks, and then we started to fall. So basically, this point is like this one, and maybe and you see what is the difference. If we draw this hidden S&D, so this is an up move before the down move. Yes, we can say that something here is unmitigated, but there is a big difference actually, because if we see a hidden S&D like fully, then this candle mitigated it, and then after this hidden S&D, nothing touches it. So yes, we can refine to this candle and so on, but this is pretty clear zone for mitigation, and yes, this is what happened. And one more addition to your monthly analysis is that yeah, basically this is what we did. So yes, it was an uptrend, but we were still mitigating this bigger move. Okay, and now let's move a bit more close to what we have here. Also, I remember that you said like here you expected a bigger reaction. But basically this is really natural to have this accumulation happening, and it's even better because imagine if you have this move. Now what you will do here? Will you buy? Will you sell? Because for a buy it's like too late. For a sell it's like too early or against the impulse. But when you have price action that is building upon each other, building the chain, then here you can be a confident buyer on the lower time frames, of course. So such accumulations are much better than these impulses, and they give you much more entry possibilities on the way up. Also, I wanted to point out that sometimes you do not define the root of the move correctly on the given time frame. So for instance, you said, I think, that the root of the move from this move is here, but if we say on monthly, then this was the root of the move for this impulse, and this was the root of the move for this impulse. And then we basically broke once to mitigate this bigger. Basically, if we say the whole root of the move, yeah, you see the big down move, then we mitigated it perfectly, so to say. So just pay attention. Yeah, and also, of course, pay attention not only to refined zones, but to, first of all, to bigger zones to understand overall how the structure holds, and then move to refined ones. So yeah, and by the way, remember what we had on yearly. So let's quickly go on yearly. So doesn't it remind you something that now we had there on monthly? So this place on yearly, where we are now, on monthly, it was here. You see, so the same pattern. Break, reaccumulation, and this is the yearly chart. Looking almost exactly the same. Okay. And we started a move. And we mitigated the zone, that's for sure. And basically, from this impulse, we are still inside this huge down impulse, working with this overall target, if we are talking really technically from this one. But at the same time, we are in this two break structure, yes, standard structure, with the overall bullishness from yearly. And currently we are moving up. So basically we are moving up. Yes, you can make an argument that we created this inside structure, and it could be true. So it could be true that from now on we are holding this inside structure and we will move down. But while it can be true, it's not what is happening right now on lower time frames. Because if you see, so what is the problem with higher time frames? It's really hard to know what will happen, because it will develop throughout the month, and it can do this, but also it can do this, it can do this and then go down to this target, just grabbing all. But to check on this idea, you will need to wait for how long? Maybe like 35 months to actually understand what will happen. And that's why we always, so we need to decide either we are trading monthly or we go lower to confirm our ideas. Yeah. So again, 51% for bullishness on monthly from my side. Let me check if I didn't forget anything, and it's basically fine. Yeah, so sometimes a good question would be, what would I do if I would trade this specific time frame only? So yeah, and then you can just think, what if you want to be bearish on weekly, maybe you want to see like this candle breaks or something like that. Okay, so and now we are on weekly. By the way, if I was trading monthly, I would probably give it one try here. So because for buying it's a bit too late, and I will try to short to this one. But again, it's just this specific time frame. Why? Because yes, we are still there, but now we are bearish structure, and I'm okay with taking some trades from here. On weekly, we are just moving bullish, okay, just moving bullish. So let's just keep it. And I had this note that liquidity grab. So you were really focusing on liquidity grab, and you kind of wanted the price to give you this liquidation and then continuation lower. To be honest, I also like to give it to myself, because then I know that we mitigated like really deeply, and now we have much more space to run to the upside compared with this situation. But you need to understand, again, there are different types of liquidity grabs. So what do you think is this one, or this one, or this one, all these wicks? Yes, it's not this obvious like screaming liquidity grab, screaming reaccumulation, but basically in fractal perspective we have like enormous amounts of trading volume liquidated here, especially here. So these are clear liquidity grabs, and until the price remains this kind of bullish, we can easily expect that it takes everything it needs to. And add to this fact that we had this big bullish push from a previous downtrend on daily, and then we created this real reaccumulation, like real liquidity grab, real reaccumulation with one shift, so something that like we had on monthly, yeah. And then we started to move up from here, and not only moving up, we also of course created a chain. So what kind of chain was created here? Yes, it's not this perfect chain. So if we start from this one, it's not this perfect chain. But first of all, this candle mitigated this imbalance. So this candle mitigated this candle. What does it mean? It means that in this move, every up candle was mitigated but by some other. So you see how how we can read chains fractally. So for instance, yes, this is imbalance. This is imbalance, but the candle itself was mitigated by this candle. So this is an example of a chain. And also these candles mitigated something bigger here. So we have a chain here. We have a complete chain here. And now mitigation, 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 smaller mitigation, bigger mitigation. Okay. Again, chain to this one. Mitigation. So everything is basically mitigated. Yes, some small portions of imbalance, but not so clean. Not so clean to actually want it to do this. And now we are moving to this daily. Yes, definitely we have this refined zone, and we have this refined zone. Agree with you completely. If we break to the downside and create some confirmation of our entry, that would be a perfect scenario. While this structure is holding, I'm much more bullish than bearish. And for me, at this point, it's okay to take to give it one try on daily. So one try on daily here. Then if it will go here, you again, you don't need to predict so much. You just need to have a rough idea, and then when the price will tap here, you can see how it will develop, because sometimes the price will just fall through your zone So when you will look at this kind of a candle on daily, it will just go down, 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 tick by tick, never moving up. But this candle already is showing some rejection. So this is already some bullish signs here. We understand that on fractal perspective, on lower time frames, we had some move down, and this is already some kind of a break structure. And I don't want to go lower because you didn't. And then you need to start to see the inside structure and the fractal structure. And these examples I will send you soon with the Euro USD analysis. And then this next video I will send you, will focus more on how you can see what the price is doing and how you can act based on fractal structure, and based on inside structure. So a good example would be this one. Price came into a zone and didn't start to fall through it. It showed you some slowing down in the price and fractal liquidations, fractal accumulation, and then in the end it went above the candle and moved further. Yes, this candle just came and popped from it. So maybe it was a mistrade, or maybe you could use a different kind of entry that I will describe a bit later and touch in this next video I will send you. So there are actually different kinds of how you can confirm even on higher time frames. Basically that's it for now. Good work, and let's move to simplified backtesting.